All right, guys, welcome to Charts in the Chat. Another one for the books. And we'll talk about markets. We'll talk about what it did, a little bit of hindsight trading. But we're also going to talk about what we can encounter in the future. I had a rough day myself today. I'm coming forward, I guess, to you guys. And one of the reasons was because I kind of paint a picture to what the market could do and actually gave it different scenarios. It didn't play out, but I mean, at the end of the day, actually, the downside targets were met to the penny plus a little more, and it's just it sucks whenever you're not in. Getting another entry is pretty hard. It did give entries. It did give entries, but by the time it gave entries, I had really hit my, my point of just taking the day off or going to do something else. Um, let's start off with, let's see, ES on the daily, and I have my lines. This is not the drawing set that I use. I've been using this lately. There's too many lines at the moment for you guys to see what I want to show you, so I'm just gonna go a little bit clean right here. I'll go from there, okay? So we know from the weekly. Okay, we start from the weekly right here. We know from the weekly last week that we were bouncing off of the weekly 20. And in fact, I don't know if you guys remember, but we ended up hitting the, let me find the drawing. Let me see. Default, no. Trade journal, no. Okay, we ended up hitting last time. I don't know if you guys remember the expected move for the week, Sigma 2 move, okay? Exactly to the penny. In fact, the weekly highs, where we talk about this on the daily, where this weekly highs right here, I removed the name of it. It's 2 standard deviation move right here on the right. That's where we ended up, right? At the 2 standard deviation move to the upside, it met this equal high right here, poke it by a little bit. So that was the aim for the upside last week, and this week it was a little bit different. We actually were aiming for a fair value gap that was showing up on the daily between these two levels right here. Let me actually do the on the new drawing set. So we had a fair value gap. This is in hindsight trading, right? But here's what I want to show you guys. We could be walking into a bullish scenario because of this. Basically, the market went in on a very exaggerated move. Whenever it went up like this, remember there was no bullseye entries or anything like that, and it left this huge fair value gap in between these two candles. So the aim for the way you use fair value gaps is not exactly as that's your aim for the short, you know. It says if is fair value gap just a massive candlestick? No, it's not. Well, it is. It is something that engulfs the prior action, like it's double or triple the size of the prior candles, but it leaves basically a fair value gap is one that leaves a candle behind it with a high inside the range and a low of the next candle inside the range, but they're not meeting each other. So meaning this low and this high are not meeting each other, thus leaving this gap behind. That tends to get filled in the future, and this right here is nothing but what the market left as poor structure, right? It's poor structure that was left behind. When the market does something like this and it bounces off of it, is basically it came and fixed the structure to continue its upside move. Okay, so that's where your bullish case scenario is. If you didn't get into longs or calls or anything at the lows, your risk is gonna be pretty. It's gonna be quite a bit. It's gonna be quite a bit, right? Because the way you use fair value gaps is that you want to join the very bottom near the zone fair value gap right here, as close as you can get. Maybe perfect entry up to this high, or just a tiny little bit above, but only stop down like 2 to 3 points below that level, right? So let's just put a level right here and see. Let's see, we're gonna put it precise. The highs of this candle were 44, 49.50, just gonna we're just gonna switch this to 49.50 right here. We're gonna go to the intraday 5-minute chart, and you'll see that the market traded how many points below this? 2.5 points. 2.5 points below this right here, below this level. So one of the rules that we keep on the VIP room, I guess, it's to long any fair value gaps like this that you're very near the area, you keep a 3-point stop loss. So this is actually went below and within risk, only 2 ticks from getting stopped out if you had gone this low, right? Obviously, like when you think that this was a bounce back area, anything that happens in between can be just noise. Just hear me out, because this is the problem with joining longs at this area, because your risk is still gonna be all the way over here. You still need to put a stop loss all the way over here. So not having long this low is kind of have the entry gone. But this is when, I mean, not everything's over, obviously. So what you do in next scenarios is to look for any other long or bullish entry scenarios on the 15 minutes, 1 hour or so, right? Something that will aid you an entry and a near stop, so you have reduced risk. But this whole fair value gap, if you want to play to the upside, that's where it becomes invalidated. Trading below right here by more than 3 points becomes an invalid fair value gap, and you're possibly gonna be going lower, right? As of this moment, it made the bounce that it was supposed to do, and we're gonna see what happens later. So another thing to note is that I don't know if we should be using the daily 20, because as you see right here, no, it gave no setup. As you see right here, it gave no setup. As you see right here, it gave no setup. Okay. I did try to play the market on those areas and just wasn't working. And now that we're below it, I'm considering not really paying attention to it. Okay. But it's there. I'll keep a note of it, right? Sometimes you see the market trade, let's say an overnight over here, and then you're gonna see a rejection off of that level. So I'm just gonna keep it in mind. If I had confluence of this level with something else to place a short position, I'll probably take a chance. Okay. So there you have it. Like, it's the bullish scenario is that it failed the fair value gap and it's gonna continue its path up. You wanna do 2 favorite retracements perspective off of this move, and the reason is because the weekly perspective starts off of this move. All right. This is where you want to keep a weekly perspective move. The weekly perspective move tells you that this was also a confluence of a fair value gap plus a 50% retracement of this move right here, when you anchor the fifth from the last swing low to the last swing high. So big confluence right there for the upside. This you could call this a possible pullback for the market to then go higher. So we're watching that. You know that if it trades below this level, the fair value gap is invalidated, and the 50% as well. So your next aim is basically gonna be going for the 618, right? So, or bearish scenarios, if we start breaking the prior day lows, are gonna be going into this low right here. So you have different scenarios. The market starts going higher from here because it's a 50% hold and fair value gap hold. The market comes up and rejects the daily 20, and then goes and gets very bearish, breaks the 50% and goes down to the 618. Or you could at least aim for a favorite retracement that goes up to the highs of this candle, last swing high to this last swing low. This is a different perspective. The last time you anchor from the lows to the highs, this is from highs to lows. This is a bearish one. Thus, what you think, if you think the market is gonna make a lower high, let's say if you aim for some upside trades, you think the daily 20 gets broken, you meet this candle low right at the 50% retracement. That's your long entry. I mean, that's your long target into a short entry, or see if it breaks through, makes a base or something like that. But you being in the middle of all this does offer a trade perspective for both sides. Okay, so I don't. There's no clear indication what the market is gonna do, and there's some stuff under the hood that worries me, and not that worries me actually. I'm not worried about anything. It's more of concerns me about the market going lower. This is a little bit of a macro thing. We don't use this for intraday trading. It's just to build up a context of what is happening and what could be happening in the future. So one of the things that I'm noticing the um, over here on SPX back into the oh sorry, back into right here, talking about expected moves. This was a breach of the expected move, but we ended up basically going back into it and sitting at the daily 20. So all in all, cash market perspective, it seems that the market cannot go lower. Does that seems like it should be bullish? It's just that the market, based on this, cannot get lower. Just based on the expected moves. That's it. Okay. Um, Probability say that market tends to be inside this range, and being we went below and we're staying above it at this time. A lot of the times when that happens, like I said on the last week session, when we stay and hold below the spectrum move, we tend to go for a 2 sigma move. Okay, a 2 sigma move, and we're gonna plot it just in case. It's gonna be exactly the last week open. Okay, the last weekly opening candle is gonna be a 2 sigma move. So if things go very bearish, this is gonna be the two standard deviation move. Last week close, not the open. Last week close. You can see this black line right here, right? So whenever we go to the ES weekly chart, we're gonna plug this level. This is the last week close. Was it close? I'm sorry, not the week prior open. I'm sorry, close. This one right here, this level right here. So if we end up losing this low, I will probably target as if things go very bearish. If we lose this level by let's say 4 or 5 points right here, I think the aim is gonna be to a 2 sigma move. I'm gonna see if it aligns with a favorite retracement of this daily move, and it does not. It's lower. And if it aligns with a favorite retracement with the weekly move, let's see. No, it's a little bit lower. So we're gonna keep that in watch. If the things go very bearish, let's say it rejects below the daily 20, it stays underneath this favorite retracements and it starts going lower, double the sigma move of the expected move to the downside is gonna be all the way over here. Okay, so the yeah, we're gonna use the same approach we used last week to catch the highs, and yeah, to catch the highs as the double standard deviations. Okay, we're gonna keep that in watch. Just gonna move it a little bit up to this level right here, just to. Okay. Sorry. All right. So that's the perspective that we have. If we end up having a lower high, this is for upcoming weeks. This is not gonna work help you out for this week, but if we end up having this lower high, breaking this low right here, it's gonna be a huge change of structure on the weekly, guys. This is gonna be if we end up being very bearish, it's gonna be a very bearish change of structure. A lower high like this, and then And then if it breaks this low, instead of making higher lows and higher highs on the weekly, like we've been doing it for the whole year and more since last September, October, since last October right here, we're walking into a change of trend. It'll be the first week if that happens. So we're gonna keep an eye on that. Uh, it says, can you also show how your demand supply is struggling with that a bit? I don't use supply and demand, so it's just basically I use support and resistance, which I think I consider them as zones, so it's the same thing, right? Um, it's not a TA lesson today. It's just talk about markets, but I'll give you a little lesson right here. It's you see a meeting point right here and another meeting point, and it meets the third point right here, and another meeting point right here. You're gonna use this as a resistance or support, whatever side you're on right here. Just a lot of connecting points on that area. And basically, since it's not just a level, it's an area, you're gonna basically do a little whatever covers the bottom part to the top part of it. So something like this, right? You're below it, it's supply. You're above it, it's support. It's demand. But yeah, so going back to the macro, guys. If you want to learn more, you can. I answer any questions that you have on the VIP. Happy to do it. But um, going back to the macro things that I've seen, besides this expected moves on SPX and everything, we're gonna talk about a little bit about bonds. I don't know if anybody's paying attention to this, but this having this upside move before the lows into a lower high is very very bearish, you know. So um, it tells you how the pops are being sold into. You know, the bonds are not catching a bid, just a relief bounce from whatever whoever is betting to the downside and then covering their positions, and then new sellers come in. So this still screams that that the that we may hit a new 52-week low in the bonds soon. You know, here we don't have any divergences playing at the lows. Nothing is still looking that those bonds are gonna break lower. And going back to what the TNX is doing, I mean, if you wanna see, if you're very familiar with bullish charts, you'll know that we're on an option about the daily 20 MA, weekly 20 MA. I'm sorry, with a weekly pullback hammer, next weekly candle highs like this. It just calls for further upside. These highs are probably gonna break, and if you see the chart right here, you notice that this was a prior week, a prior peak, right? And when you come in and reject the same peak, it makes sense, right? It's like, oh, it's a double top or whatever you want to call it. But whenever you, instead of making a full rejection, you make a relief bounce like this, it indicates like it was a refreshment of energy, if you want to call it. It's just refreshing energy, and then boom, to the upside again, right? So it's best seen on the daily what it's doing. Um, but you're gonna be using bonds to determine this, right? So all this is pointing for major pain into technology. You know, whoever is leveraging into debt, where they're gonna be dealing with higher interest rates, there's gonna be a lot more pain. And in fact, I think a lot of the times you may think that usually high rising rates will help banks, but at this time, I think we are if we start breaking even higher, we might see stress points where the banks are not gonna perform well with higher rates, right? It's just gonna lead to more delinquencies, and it's just not gonna be overall good for the banks. As you can see on the charts, the market's not buying it, right? Higher rates are not equaling higher moves on banks, right? J.P. Morgan breaking off of these levels is just falling at the moment, a little bit extended, but it's still falling. The whole sector XLF had a relief bounce, probably just to cover this area. Let me see. About the 618. But all in all, I think rates going higher is not gonna help banks, right? It's not gonna help banks. Look at, you can see Wells Fargo is performing, rejecting the daily 20. So it's one of the things that the market may seem like it's the bond market at least is it's showing us that it may hit new 52-week lows, right? The what else I was gonna show you guys? Oh yeah, Apple. I don't know if you guys ever seen a Apple candle this big intraday, right? Because I know the earnings were what 6-7% down, but this candle intraday, I think dwarf is any intraday candle you wanna see to the upside, downside. Maybe this candle to the upside right now, invertedly to the downside. Yeah. So Apple has done this range before, but it's just very odd. It doesn't meet this. So we as for now, I've just seen maybe five candles that meet this range, and that is pretty huge. I would think that is pretty huge, especially because and I talk about this. We actually went short Apple. I just didn't hold through like I should, but I think this is very bearish, right? It's going up to fill a gap, but not doing it completely. Feels like sellers are coming in before when they can get a chance, and everything is just dying as soon as it comes down. If you want to talk a little bit about the structure, if you anchor the last move higher like this, you'll notice that the we're still not that bearish, right? A little bit about the 618 or so is bouncing. Weekly perspective on it should have you anchor the fips like this all the way from these lows. It's still on the 50% retracement above it. So yeah, I mean, not only was Apple like this, but also Nvidia. And Nvidia, I think what was is still not. I mean, I wouldn't be all over bearish on Nvidia, but you can see the big names that have been carrying up the market lately. They're not doing so right. They're pulling it back instead. It's still at a buyback area with the daily 20. As seen before, it makes bounces like that. But I will be worrisome because this high is a lower high. So it's at a possible change of trend on the daily to the downside. Okay, that's on the daily, right? That only happens if it breaks this low, right? Once you make your higher low that you had previously like that. But on the weekly, it only becomes bearish until you break this. So I'm not paying too much attention to Nvidia. It's just that today was it was a very bad performer. I mean, from the open, this thing sold off from the open. Okay, very bad performer. Regardless of what that little bitty bounce at the daily 20. Quantum saying Microsoft might be the next Apple. Let me see. Maybe they're taking turns to sell. We'll see. Well, we have an inside candle, so I was go with the range breaks of the inside candles. I love them. Put in alerts on both ranges since it's inside the range. It's still about the daily 20. It's a little bit different than having shorted Apple where it was extended from the daily 20 and then short to meet the overextension, something like this, right? Like it was so extended from the daily 20, and my short was aiming for the daily 20, and it just went even lower than that. I was a day late on this short. It says not saying this because it shows on the charts, but headwinds are stacked against it like a ticking time bomb. Yeah, I mean, I don't know how they're standing on their. You're more knowledgeable on this, but I mean, I believe not every tech stock is positioned the same against higher interest rates, rising interest rates, and I don't know how they are positioned right here on Microsoft, right? But at the end of the day, they all may die, right? If we continue like we are. I'll give you a little bit perspective on Microsoft. Mm, the weekly 20 still has to go a little higher. This is a hair anchor right here on the weekly because I know that high was the I think the AI hype high, if I remember correctly. This was the AI hype, I believe, and then just went lower. Um, but yeah, I don't have a really technical perspective of this. Just that it's basing the inside candle, and I'll have some alerts above and below that inside candle. But I'll keep it on watch. Thank you for letting me know because I wouldn't have seen it probably. Um, so let's actually go into NQ. See if we see anything on this. Okay. So we have a couple different things on ES, right? ES came in and filled this fair value gap that it had to the penny and a little more, just inside, it's still admissible. But this one, right now that it's placed in this relatively lower high compared to this, it's in the danger zone, right? To make a lower high on the weekly. So we're gonna keep an eye on that. The daily is still, like I said, ES came in and filled this fair value gap. This one did not. Not even to the midpoint. The midpoint tends to be also a point of interest on the markets, which is this area. I just drew the fib so I could know the fib point. It's just this area right here. I'm keeping this level on watch in case we start breaking the daily 20. But if you can see, this was a bullish bounce of the daily 20, and I believe it's a fib retracement on the daily as well at 38.2. Yeah, 38.2 retracement and daily 20. So that tends to be a very bullish sign. That tends to be a very bullish sign. I don't like the fact that it's leaving poor structure behind because NQ may leave poor structure behind and it's gonna fix it later. Something like this, right? Left poor structure behind, fix it later, came back down. So I don't want to get overly bullish because it's a 32 retracement hole, because it's a daily 20 hole. I don't want to because it's poor structure right here below it. You start breaking this and you're most likely gonna go into the midpoint 50%, and then boom, next thing you know, full fair value gap fill. So um well, yeah, I'm not gonna get overly bullish on this. I have some QQQ calls, but I'm just taking a small chance with a small size on this. Uh, that's what we have actually going to NQ. We have the same fib perspective from the weekly that we anchor from this low to this high. We're not meeting anything off of here, but the daily does. This is daily perspective. You want to anchor the whole one single move. That's how you do it. Just the reason we talk about the weekly is because the whole move starts from here, right? But daily is good enough. Daily is good enough. It actually convinces me more of the move right here. But yeah, a lot of times I'm just changing the perspective to whatever fits the bias in, and it has any confluence to the other levels. Um, this area right here is gonna be a point of interest for the for the overnight session or tomorrow. If we end up trading higher, could be a short entry. And your bearish perspective will always be anchored at the last highs to the last low. Okay, you can always get entries of a perspective like this, right? So you start trading higher, you can use them as your next as your next targets or so for a possible lower high. So it all depends on the bias that you have. You construct that bias and you look for if you're gonna be playing the bearish perspective or the bullish perspective on the fibs. But yeah, I think that's all the information I can get from ES and NQ. Just pointing out that, and last but not least, the ES RTH gap that we have right here. So we're gonna go to futures, get rid of extended hours right here, and we're gonna point out this gap that we have. This is not a fair value gap. This is a true gap. Okay, this is a true gap. I'm just gonna put some. I guess in color, whatever color that doesn't look too bright. Oh shit, it's bright. Just gonna leave it like this. But it's a gap that we have, and that goes back into poor structure. That's poor structure again that we have, that the market could go and fix it. So if you catch a long trade that is going inside the fair value, inside the truth gap right here, your aim is gonna be for the completion of the gap, because you don't know if the market is trading higher just to fix the poor structure that is left behind, right? So that's gonna be a long side target if we end up moving forward to the upside, and I'm gonna keep an eye on that right here, shaded area right here. It does it align with any fee retracements on the bear side? 50% at the middle of the gap, so we're gonna use that level, on the future. 50%. Look at this. This is what I call confluence, right? Your favorite retracement on the bear side, 50%, along with this candle lows right here, this candle highs, and the midpoint of the true gap. It's not even it's exactly at the middle of the true gap right here. So all that, I use that as an information for me to place a level and consider it pretty strong, that I go even and color coded. Okay. My bias, my self bias, because people are always curious, if I'm aiming higher or lower or not. I'm gonna be very neutral on this upcoming days. I tend to have a very strong bias of what the market's gonna do, but I want to adjust, just because of what happened today. I want to adjust to what the market is doing, just to let you know, right? I kind of want to go back to this trade. Oops. Okay. Kind of want to go back to what this trade was for me, you know. So one of the things that I was looking for the market to do at the open was a dump. Myself, I was looking for a dump at the open, which it did happen. But what I was looking to play was the reaction to the dump, right? Because a lot of the times, whenever you have an opening drive that is like this, a pump that is dwarfs all these candles like this, you're gonna place your favorite tracements up to the bottom of the dump. So usually, one of my trading rules is that I either want to be short at the 50 or the 618 of the dump that happened, as a play of retracement to then go short, or if it trades above it, which it did, to buy a pullback into a possible candle highs like this, which this is where I got long, for a possible gap fill, and then go from there for a rejection or a break, and try to buy a pullback or something in between. So what happened to me this morning was basically I got my setup that went above, it recovered the whole drop, and I wanted to go in. I knew earnings were, I mean, not earnings, I'm sorry. I knew the news were coming in at this candle, because this candle, I don't know if anybody was trading live, but this candle, I knew they were coming. It was coming in, but since given this action, I use it for forward information to tell me if the news may do a pop, for to fill the gap in an instant move, with having my orders to get out instantly close to it. But instead, it did the opposite, right? IMS services, whatever it came in hot or whatever it is, I did not follow the numbers, but it just came into the wrong opposite direction, and then I was just unable to perform at that point. But I think there was no retracement entries off of this move, anything in between until this area happened over here. There was some entries for the short, but honestly, this was not exactly clean price action, to be honest. Um, just to clarify what happened, because I know I have some VIP members today, and I'm still dwelling over this trade, but by tomorrow I'm moving on to the next thing. Okay. Um, so yeah, that's what I got. That's what I got. Let's see, what time is it? 7:37. Mm, yeah, that's what I. Yeah, something like this. You see, this is a good example of a big opening drive like this, where you anchor your fibs, so it went above, but you want to take your chances at the short at these areas, which I remember this one. I did take it. This gave some nice gains, but then I don't know, it got a little bit choppy when I filled a fair value gap and so on. Something like that, right? Um, what else? What else we got? That's it. I mean, I had a little information about IWM. This is the we can see that the IWM fair perspective on the daily matches at the lows with a 6.5% retracement right here. So this is interesting that the market is bouncing at those very key areas, the NQ daily 20, ES fair value gap on the daily, and IWM at the 618. So if the market wants to go higher, it has it all right there. It has it is bouncing at the key parts on every single market. So um, I cannot marry the short when I see this, but I cannot marry the long when I see stuff like Apple, like Nvidia or the possible drop on other techs like that, right? Um, I'm currently, I don't know if I'm wrong or not. I'm currently long on Amazon, and this is on runners that we had from a day trade today. Um, I was able to get the principal out of the trade, and I'm just trying to see if tomorrow, since this is a whole of the daily 20, I was trying to see if this candle was gonna just not even breach the daily 20, but it did. But it's holding it, and if tomorrow the pre-market trades about this area right here, guys, since it's a whole of the daily 20, 50% retracement, golden zone hold, and everything. If pre-market tomorrow it's around this area right here, I think it's an immediate long on Amazon to go higher. So this is something that I'm keeping on watch because it can be a huge candle. It can be a huge candle. Okay, it's gonna be lot of weeklies because it's not a lot of Friday, but a lot of weeklies. Okay, but if it opens at the lower end, then a trade can still happen if it opens above the daily 20. But the high confidence trade, if whenever it opens on the, you kind of want to divide the candle by three parts, right? Three parts, and if you open on the upper third, something like this, you have higher possibilities of having a breakout. You know, so that's what I got, guys. Any suggestions or any tickers that you want me to watch, and I'll cover them. If not, we are done. Nothing. Alice, Jairus, KG, Okami, Puts, Quantum. By the way, Puts Party, when are we gonna see you back in the VIP? We missed you. You would have held that Apple tray that I placed, man. You would have held it, I know. Yeah. Um, and we're also looking to do a futures challenge soon. It's not gonna be a challenge account. It's gonna be more of a competition between all of us. No prize, only honor. But yeah, I mean, whoever gets the first payout, starting at the same time, is the winner. I may think of a prize. I don't know. Free VIP month. I don't know. Something. I don't know. What's that, Remy? I I did it. I did it. I did record it, and I make sure my microphone was recording. I'm actually gonna stop the recording right now.